considerations too. So that is how it works in this in calculating this your right of use of asset. So it comes here. The only difference is here is that if lease payment is made in advance, under advance you will recognize it, but if it's under arrear, you will not recognize it. The lease payment will not be recognized when you are calculating your right of use of asset. And so whatever value you have here, the accounting treatment is that you debit your right of use asset, then you credit your lease liability. So that is just that for that. So very quickly, let's run through the solution. I just have to give you this so that you have the overview of it in case you miss it out initially. So let's really run through what we are to do right away. So okay, right of use asset, that's what we want to determine under the arrears and then the advance. So I will put the two together as I have done when I was doing the formulation. Then you have the arrears, right of use under the same under this headline. So let's do our workings first, because we need to get lease payment present value first, because that's the first item that we need here. You know, the first item is that the present value of lease payment or unpaid lease payment. So now let's go workings 1. In determining the present value of our lease payment, we just use this simple formula. The simple formula is present value is equals to A1 minus 1 plus R raised to power minus n divided by R. R is rate, N is number of years, A is the amount that is involved, the principal amount that is involved. So when we put it through, we have what we call 100 into 1 minus 1 point. They give us our rate to use as 10%, 1.5 raised to power, the year is 5 minus 5. Then this one like this, raised to power 0.10. So when you punch it into the calculator, it gives you an answer as it were. So let's quickly use a calculator. Use our calculator to get the answer. So this is it. Very simple. You just put number 1. You just put the 1.10 raised to power. Look at it. Raised to power minus 5. Give you an answer. Then you put your 1 minus your answer to give you this answer. Then you now divide it by 0.1. Then it will give you 3.790. Then when you put it there, multiply it by your 100 m to give you 379 m. Our answer is 379 m. So we have gotten our present value of our lease payment. So now this working that I have done is for payments in arrears. Remember what I told? I said present value of unpaid lease payment. Because payment have been made in advance, what we are going to carry here now will not be for 5 years again. Rather, we are going to do 100 million. You know, we're supposed to do 100 million in 5 years under arrears. But since they say they have made payment for They have made payment for 1 year already in advance. They have already made the payment. When they make payment in advance, it means they have already paid out the 100 million. They have already made payment before now. So if this is working now is for the one in arrears. The one for advance now will now be present value. The formula is the same formula. Just put 100 million into 1 minus 1.0 raised to power minus 4. We are not going to use 5 years, because that's why I said unpaid lease payment, unpaid lease payment. So we look at the number of years, the number of years that is remaining for us to make the payment. Now, if you check this question, they say the lease payment, that is the payment that is expected from the lessee every year is 100 million to the lessor. You understand? So what we want to do is to find out what will be the present value of that lease payment. This, is a spread, right? We are going to pay for 5 years, meaning we are supposed to pay 500 million within these 5 years. Is that not so? But we want to know what is the present value of that 500,000 flow, cash flow as it were, in today's term, and that's why we are discounting it into today's present value using the incremental borrowing rate. And since they said they have already made 100 million payment, meaning that 100 already has gone. So what is remaining is the 400. So what will be the present value of the 400 that we have not paid? That is the one we are doing under this advance. So let's really put it. I want you to try it on your own. Do this calculation on your own, this present value on your own, because this is the logic for you to be fast when you are writing any of your exam. Instead of doing it one, you just do it using the annuity formula or any other formula that is suitable. Just use it. So this is how best you can be fast in your exam. Especially when you are writing this provisional exam, timing is of essence. How you are able to beat the time is very, very important. So we put it again: 1.1 raised to power minus 4 to give you this answer, then minus 1 to give you this answer. Let me go back again. 1.1 raised to power minus 4 is this. 1 minus answer is this, divided by 0.1 is this. So 3.16, that is what we got. 3.16, that is what we got. Multiply by 100, then you have 317 approximately. 317 approximately. You see, there is a difference. There is a difference between the two. So let's put it down here. So we have our rounding off figure like this. So this one is 317, whereas this one is 379. Okay, let's quickly go. Lease payment. Do we have any lease payment that have been made? Yes, we do. For advance. So we recognize the 100 million that was made here, then we will not recognize it here. Please follow me. Then the next one is a direct cost. The direct cost, we are told, is 70 million. The direct cost is 70 million. The two we have it 70 million. And then we have incentives. What is the incentive here? Say our incentive is what? Where is it? 5M. Incentives 5M. Remember I told you the incentive is the one that the lessee receive when it's trying to put the underlying asset in order. Maybe the lessor just give him an incentive. You have to less it for you to know the value of your asset as it were. So what is that for that? I think there are no other things there. So we close it. So what do we have? Let's quickly run through. So we have 317 plus 170 minus 5 give us 482. 482. Alright, this one is 379 plus 70 and minus 5. And you have 444. 444. See? That is it. So it's as simple as this. This is your right of use of asset under advance and under arrears. You can be given the two in exam and they ask you to calculate it. Now instead of doing it one, just combine it this way and then you are good to go. They say we should determine the initial measurement. Is that not true? That is how this thing is. It's as simple as that for the right of use of asset. The right of use of asset is how to get the calculation. So now very quickly now let's determine our lease liability. Lease liability, that one is very, very simple. The lease liability, So also we do it in arrears, in advance, and then in arrears. In advance and in So it's very simple. It's not something that is difficult. All that you need to know is to just put your mind. Look at what I am doing. So to determine the initial measurement under lease liability, it is just like what you are going to do is whatever it is that you have as your right of use of asset. I told you the treatment is this: you debit your right of use of asset under non-current asset, and then you credit this liability under your non-current liability. But it is important that when you are determining your initial lease liability, you must be able to remove all the cash related items, cash related figures in determining your lease liability. Is very simple. So the symbol that you just need to know is that in determining your initial lease liability, it is always the liability, or let's say the right of use asset minus all the cash related item. Cash related item means that those payments that were made first in cash, that cash has, there is a cash outflow and inflow. For instance, an example is this: your direct cost, this initial lease payment, this incentive. All of these three put together, they are all cash related because they have already been spent. So you remove it to know what will be the balance of your liability. So you will not just go and carry this whole thing as a liability, because some payment have already gone out of your hand. So this is how to do it. Under the advance, you are going to recognize the lease payment, the direct cost, and then the incentives. Whereas under the arrears, you will not recognize this lease payment because you have not paid it. It has not gone out of your hand. But rather, you recognize the direct cost and then this incentive. So let's really go. So we have our right of use asset. Here to be 482, and this one is 444. Is that not so? So we move on. What do? We add we less our cash item. So we do the workings here. Do the workings under here. So we have our first one to be the lease payment. Lease payment is a cash item. So we have 100 million, right? 100. There's none here. Then you have direct cost. What is the direct cost? We have 70. 70 is here. This one too, we have 70. Then you have incentives. Remember, your incentives will always be net off from your direct cost. So we have net it off. This is 5. So here we're going to have 65 that will be taken from this one. Here we're going to have 165 that will be taken from this one. So let's check out what our lease liability will now look like. Very quickly, let's look at it. Just follow me as I am taking you through. So we have 482 minus 165. 482 minus 165. And this will give us 317. 317. And this one is 444 minus 65. This one will give us 379. You see that you see that our right of use here is increased. Here it reduces. Whereas our lease liability here it reduces. Here it increases. Why? Because lease payment are being made in advance here, whereas this one it has not been made at all. So this is just how to determine your initial measurement of the right of use of asset and the lease liability. Now, assuming that this question asks us to do the subsequent measurement, is very, very simple. It's not something that is difficult. So our next illustration, we are going to look at determining the right of use of asset, the initial, the subsequent, as well as the lease liability, initial and subsequent, as well as the accounting treatment will be a full illustration, and then I'll be giving you the step-by-steps approach to deal with lease liability. Thank you for also staying tuned and staying tuned again, and see you in the next video. Thank you. Please subscribe like I've said. Thank you.